Good morning, you listen to FloorDaily.net, and I'm Kemp Harr. This morning my guest is Kermit Baker, a Harvard economist that tracks both the residential remodel side of the housing business and also the chief economist for the American Institute of Architecture. Kermit, how you doing?
I'm doing well, Kim. Thank you very much.
It's good to talk to you. Last time we talked, I mentioned that you're in high demand because everybody wants to know what's going on in the economy. I'll tell you what, let's cover both sectors. Let's start with the bright side and talk about residential. Obviously, the house is the oasis. It's the safety net. It's the place where people can go, and not only, like today I'm talking to you, you're at your house, so people are investing in the home, aren't they?
Yeah, homeowners are spending an awful lot of time in their home, and when they're doing that, they're thinking, gee, a lot of projects I could be undertaking here. And if they feel comfortable undertaking it, particularly those outside projects, those exterior projects, kind of roofing, siding, windows, things like that, make an awful lot of sense to do, and a lot of households are taking advantage of this period to kind of, catch up on that to-do list.
Now, you put out a report that's called LIRA, and last time I remember reading it, it was talking about how you were expecting a downturn, but that's changed, hasn't it?
Yeah, no, we were expecting some weakness, and in fact, the market was very weak for about 4 to 6 weeks from mid-March through mid to late April, just as people were kind of sorting out what was going on and what they really wanted to do. But starting in late April and continuing, it's an industry that's just been going gangbusters. I think, quite to our surprise, and I think quite to the surprise of others, too. Don't need to go into a lot of detail, but we're seeing this sort of surge in lumber prices, and that seems to be based on the fact that the residential market, both home remodeling as well as new construction, is really caught the whole industry off guard in terms of its strength.
I guess the big question, and the reason you'd want to call a Harvard expert, is how long is this going to last?
I think the residential market is solid, assuming we don't have another downturn in the economy. There's a lot of folks that really are fundamentally not affected financially by this. There are a lot that are, but there are a lot that aren't too, and they're taking advantage of this. And we're seeing a lot of folks that are, maybe I don't want to live in urban areas, maybe I want to buy a home in the suburbs or exurbs, and kind of using this period of time where mortgage rates are at really historical low levels and have time to kind of think about what they want in terms of their home. A lot of households are saying, this sort of 1,200, 1,400 square foot apartment just doesn't work for me. When I'm trying to find a private space to work, my wife is trying to find a private space to work, the kids are running around, could use a backyard. I think people are just fundamentally rethinking what they need in a home and using this an opportunity to try to right-size what they have.
So this could be prolonged. That's good to hear.
I think it could, yes.
Yeah. All right, so let's talk about the builder side. The builder is hot as well, right?
Yes, you're talking about home builders.
Yeah.
New construction side, Kemp. Yeah, they're doing quite well. I think, again, there was a concern after we saw home building dip a little bit in April and May. But, it's come roaring back, and, we should have a good, solid year for housing this year. I think the challenge is going to be, we were doing fairly good before the pandemic on the upper end of the market, Kemp, kind of custom and luxury and even trade-up homes. Trying to find an affordable product and build that profitably is going to be pretty critical, because those are the folks, I think, that are really out there looking to get into the market. Younger households that need more of a down payment, need to save up for that, and have financial constraints and, something that banks will tolerate. That will continue, I think, particularly as long as we can get the price point within an affordable level.
Yeah, the Wall Street Journal has an article this morning about how the millennials are not doing well in this virus economically.
Yeah, I think it's really been very much split in terms of who's doing well and who's not. And kind of curiously, almost exactly the mirror image of what happened during the 08-09 recession, too, which really affected more white-collar positions, sort of financial institutions, things like that. This is very much blue-collar, hourly workers, hospitality, hotels, retail, a lot of them kind of minimum wage workers that are really taking the brunt of this, and younger workers, too, and that makes it particularly tough.
All right, let's switch to the commercial side. I think there's been a backlog, so it's been okay this year, but as far as down the road, tell us what you're thinking.
We kind of divide the commercial market, if you will, or the non-residential market into two pieces, Kemp. One being commercial, that would be offices, retail, right, hotels, and the other being institutional, where, education and healthcare would be the biggest pieces. And I think going into this year, there was some concern about the commercial side of the market. We had done a forecast that we put out, a consensus forecast at the American Institute of Architects that we put out in January, basically saying the commercial market was going to be effectively flat this year with some real downward pressure on the retail side, but lodging should do pretty well. And now what we're seeing is, this market has really been hammered pretty hard, but it's just kind of flipped over in terms of that. The strongest sector, relatively speaking, is the retail side because people are still buying things, and the weakest sector is lodging because people just aren't traveling at all, and so have no interest in staying in hotels.
Well, I read a stat not too long ago that said that the per capita square footage of retail space in this country was 4 times greater than Europe. So we're a little overbuilt on retail, aren't we?
Yeah, well, I think that's probably right, too, and I think we're a little overbuilt, particularly with this move towards e-commerce, and that has been accelerated during this downturn, too. Although I did hear a stat recently which kind of surprised me, is that they said you need 3 times as much space for an e-commerce sale as you do for a bricks-and-mortar sale. And I think what they're looking at is all these sort of distribution and warehousing facilities, not things that, for example, architects get much involved in or a lot of building product manufacturers because they're basically big storage boxes.
Right.
But once you get a sophisticated logistics system built out, you actually have to build a lot of facilities to support that.
Well, my listeners aren't going to be excited about that because that's concrete floors.
There you go. Yeah,
Right, so
it is pretty focused in terms of what products are used there.
Yeah. So tell us what your outlook is for the commercial market long range.
Well, we just put out a couple weeks ago, Kemp, our mid-year update for the consensus construction forecast, and I would say it's weak, but could be a lot worse. The consensus is about minus 8% in terms of spending on non-residential facilities this year, a little bit worse on the commercial, a little bit better on the institutional, and another 4.5% decline next year. Again, still pretty weak on the commercial and a little bit stronger on the institutional. Healthcare, for example, maybe less of a focus for your listeners, but that looks pretty strong. But really all the commercial sectors are going to be kind of touch and go, I think. At least through mid-year 2021.
No, healthcare is actually important for my listeners. I guess the big question is this office question because right here in Chattanooga we've got 2 major insurers, and they've both announced, both of them employ about 4,000 people, and they both announced, hey, they're not coming back. So what's going to happen to the office market?
It's a real interesting question because, number one, I think a lot of us have learned to telecommute effectively, so we don't need all that space. I think a lot of employers are saying, my workers can work at home just as well as they can work in the office, so I don't need that space. The flip side of that, or the other factor to consider, is that we've been shrinking square footage per employee for offices for quite a while, really, 5-10 years now, going from fully walled-in offices to cubes down to kind of open space layouts and things like that.
Yeah.
Now, those are not going to work anymore, so how are we going to house the folks that do go back to offices? Are we going to go back to fully walled offices? Or are we going to just have some system in place? But I think regardless, we're going to need more square footage per employee that does go back to offices. So that'll be a bit of an offset. I don't think it's going to compensate for the telecommuting that we're likely to see really pick up dramatically or continue to grow dramatically, but it will offset part of it at least.
All right, that's an interesting point. I'm glad you made it. And it's great to catch up with you again. Been talking to Kermit Baker, a Harvard economist and the chief economist with the American Institute of Architecture, and you've been listening to Kemp Harr and FloorDaily.net.